if we successfully hold above 30,500 for multiple days, I'm really looking for 5 to 7 days, then to me, you probably do have a low on Bitcoin in. As of now, I'm not convinced of it. I still think this is a bear market rally. I still think there's more shoes to drop in the risk asset market. And I always look at it like it's going to be worse. If the Fed says something, always think 3 steps worse than what the Fed is telling us. So I'm really expecting the big downside to come in the second half. And my case for that, my thesis for that is that it'll come when the market finally is recognizing that a recession is on the horizon. And the way they're going to recognize that is we're going to finally see the jobs numbers really start to crack. I'm skeptical that we're going to get the same sort of bailouts that we saw in the next period. And again, I do think that a recession will come and the market is not prepared for it. Bitcoin remains just underneath a major technical level. This 30,500 level, we've hammered on it. We can see, in fact, on the chart right here, lots of resistance. We've tried to push above it. Each time we're failing, at least at this point. Yesterday, we pulled back pretty sharply and then rallied back today as there's kind of a risk-on attitude back in the market. But the bottom line is this 30,500 level, number one, it's an even number. So it's anytime you get above a 30,000 or a 40, there's always going to be a tendency to get kind of the last people in the trade, which weirdly enough is not the best thing, because once you get those last people in, you don't have a lot of new buyers. And so I think that's what's happening here with crypto. We're into this level where if we zoom out, this was the low from the 2021 bull market cycle. And it was also the low right here. And we've basically done a round trip. And I know I have a lot of lines on the chart, but we've done a round trip from that breakdown, which occurred in June of 2022, all the way back to where we are right now. So again, if we look back here, and again, this area here to here, that's where we're hammering on right now. And to me, that's a huge psychological level. If we successfully hold above 30,500 for multiple days, I'm really looking for 5 to 7 days, then to me, you probably do have a low on Bitcoin in. As of now, I'm not convinced of it. I still think this is a bear market rally. I still think there's more shoes to drop in the risk asset market. Again, if we look back at the bear market of 2017, 2018, 2019, I mean, we had rallies from 3,500 all the way back to 10,000 and then back to 3,500. So you've had these bounces in Bitcoin that have actually even been bigger than what we're seeing here. We're just up around 100% or just under 100% versus back then it was 200%. So I think we have to keep that in mind. I also think that if you look at what the Fed has said, you have to be very careful here. So we do know that the SEC continues to sue and kind of put down regulation or the beginning structure of regulation in crypto. And then the Federal Reserve just came out recently and said, hey guys, we expect a slight recession. And if you're anyone like me and you hear slight and the Fed saying slight and they said transitory and we saw what happened, you have to be nervous about risk assets in the future. And that's where I am. I honestly think that stock market's getting ready to have a second half that is going to be atrocious. And my guess is it drags down crypto as well. And gold has been a rock star. It's not outperforming Bitcoin at this point. That's true. But it has been an amazing mover off of the lows since the start of the year. And it honestly is going to go higher. You have all the makings for it. I mean, basically, if the Fed gets inflation under control, then you still have the case where it's probably because the economy's collapsed or in a recession. And again, that would then make people less likely to spend money. But again, that recession is a kind of a scary situation. So gold goes higher. If the Fed can't get inflation under control, gold goes higher in that scenario as well. So I'm still bullish on gold. The 10-year yield topped out last October. The dollar topped out last October. When did the stock market top out or bottom out? It bottomed out last October. So as yields have fallen, that's bullish for gold as well. As the dollar falls and pulls off of these highs, that's also bullish for gold. So you have those two things that the stock market right now likes, and also it's good for the bull case for gold. And I think lastly, you have to just be in the camp where you say, okay, inflation, yes, it's come down, but it's still elevated. And therefore, that's also a bullish case for gold as well. My guess is we're headed back down there by the second half of this year. That would be around 3% on the 10-year. So I actually think there's further downside on the 10-year. Another ETF that's a great way to follow it is when yields go down, the TLT tends to go up. It's kind of an inverse ETF here. And you have this beautiful sideways channel of bullish consolidation, which eventually tells me that the TLT will move up, which tells me yields go down. The only way yields are going down is if we do get a recession or at least a slowing economy that's significant, which then basically makes the Fed potentially have to start backing off their rate hikes in the second half. I think that for the most part, inflation is going to come back to about 3% and be very, very sticky there. And that's going to be problematic for the Fed because they can't really stimulate in a massive way when inflation is at 3% already, because you stimulate at 3%, we go to 12%, 15% inflation off of the same type of money printing that they did in 2020 through 2021. I think you get into a recession in the second half. In fact, the Fed basically said that just a week ago. Interestingly enough, the stock market has ignored it. Risk assets have ignored that. But again, the Fed is telling us exactly what they're expecting. And I always look at it like it's going to be worse. If the Fed says something, always think 3 steps worse than what the Fed is telling us. The markets don't care until they care, right? So last week on CNBC, I happened to catch Warren Buffett saying that he has a retailer that he owns, right, and that Berkshire Hathaway owns. Year over year, their sales of this retailer were down 22% year over year. So to me, that was a shocking statement. I mean, that is a massive decline in revenue, and the market again ignored it. Nothing big, nothing to see here, essentially. So those type of things I'm picking up when you have big players that know what they're talking, the David Teppers, the Warren Buffetts, these big name hedge funds that you have respect for because they're accurate. That's what I pick up on out there. And then also the charts. To me, this run up that we've seen looked very much like the run that we saw from COVID all the way up to 2021. We've then had this sharp decline here. Now, look at the price action that we're seeing here in this psychology of the market chart. It's a lot of sideways to slightly up, okay? You have the same sort of sharp move up, getting to euphoria, the sharp move down. There's even this little pivot where we had a lower low and then sideways consolidation. And so again, if you look at this down move and this choppiness, this is exactly the part within the psychology of the market that is going to tell us that this is the next down move to go. And just to reiterate, I want to switch back to that chart. Just remember what we just saw right there. And that's this part. We're right in the midst of this complacency period where people are saying, oh, it's, the bull market was so great. I want to revisit that. It's going to come back. I really hope it comes back. Let's just sit and wait here. And that's what leads us to this next period of downside via psychology of the market chart. So look at the crypto markets right now. They're as bullish in the crypto markets as we were when we were at 69,000. That's how quickly we've got back. That's complacency. They're basically saying, hey, listen, we're going back to all-time highs. To me, that's a red flashing warning sign out there to be very careful in this market. So I'm really expecting the big downside to come in the second half. And my case for that, my thesis for that is that it'll come when the market finally is recognizing that a recession is on the horizon. And the way they're going to recognize that is we're going to finally see the jobs numbers really start to crack. I think by the second half of this year, absolutely the market comes to that realization. Then all of a sudden, now that once a recession is the norm, you have to see repricing of assets like an Apple, like a Microsoft, like even a crypto to get down to levels where it makes sense. We are kind of a drug addicted market where we've always got new drugs from the Federal Reserve if there's any hardship, aka 2018, the Fed started to raise rates. Before you knew it, the market freaked and they were cutting rates. All right. So the market is kind of in this phase of they say, hey, listen, even if it gets a little rough, we're going to be rescued. Everything is always about the government, the Federal Reserve rescuing us. So let's just keep going in. Why would we believe anything else? And you can't fault people for thinking that way. They've been conditioned to think that way. But to be honest, that was when inflation was lower than 2%. I'm skeptical that we're going to get the same sort of bailouts that we saw in the next period. And again, I do think that a recession will come and the market is not prepared for it. So 30,500 is the technical level. So it needs to stay for 5 to 7 days above that level on a daily basis above that level. How many
days are we?
And then I think, what's that?
How many days are we now so far?
So far 0, right? We're now just above it for the first day again. So it resets every time it comes below. So yesterday we closed in the 29,000 range. It must stay above. And one of the reasons why this is so important, people say, well, why does it have to stay above for X amount of days? Because algorithms and institutions want you to think it's broken out. I've seen this on charts of stocks, commodities, crypto, where they're trying to get you to trigger long so that you buy and they can unload their position. So the longer it stays above, the harder it is for them to utilize capital to push it back down at a certain point in the future. So that's why it's important that it stays above for a certain amount of time.